we have, and this is why to me it's very important to understand market cap. So for the market cap, let's say it's a 2.4 million market cap. This means it can move fast up or down versus a market cap of a 2.4 billion. Well, this can still move up or down, fairly quick. However, not as fast. In general, either up or down. Could it go 15, 20% in a day? Sure. Could it go 30% in a day? Sure. It just depends on the amount of people who are trading this coin. That's what we call volume. Now, if this low market cap coin has volume, and only if it has volume, people buying and selling, then it can move very fast up or down. Now, if there's no volume, which is people buying or selling this, it could be a perfect scenario, bullish divergence, bullish pattern, bullish bounce off of the 200 SMA. Everything looks great. But if nobody's trading it, then it's not going to move. So now getting to the leverage portion. So here we go. Let's say for this larger market cap coin, you could potentially do a 10x if there's not a lot of volatility. If it's not moving like this, then you can do a 10x. However, if it is moving like this, maybe just to protect yourself, maybe you want to do a 2x. And the reason for that is because, sure, it reset and it looks like it's going up, and it, met a fair value gap or an order block or your 200 SMA or whatever stuff that you're trading on. Let's just say that this is your perfect entry. Like you have 5 things that agree with each other. This is your perfect entry, and you're doing a 10x. But because it's so volatile at the moment, for whatever reason, then it could come down really fast, stop you out. This same 10x that we're trading, if you were to do on a lower market cap coin, because this can move extremely fast, and we're talking like this move right here, this could have been a 4% move. However, with this market cap of 2.4 million, this same move could be a 25% move. The exact same move that just happened on a larger market cap coin could be. So if you are trading a 10x on a very low market cap coin, it's extremely dangerous. I mean, you can make some money, but you can also lose some money really fast. Your stop loss can get hit like super, super quick. Let's see here. Now, in my opinion, depending on how long you want to stay in the trade, and that's another thing, the time frame. Are you looking at, is this chart right here a daily chart or a 3-minute chart? How quick do you expect to be in the trade? Now, if you expect to be in the trade for a couple hours, maybe a day, this 4% move that happened in a day, or whatever time frame we're talking about, if you want to increase your profitability with reducing the amount of time you're in it, well, then you go higher leverage. Understanding the risk, though, that's really important. And I teach that a lot. It's the risk. So if you're, you know what, I'm gonna be in this trade, hopefully, for example, Bitcoin, I trade it with very high leverage because I plan to be in and out within a few minutes, versus if I'm gonna play Bitcoin and I'm gonna hold it for a week. But if that's the case, I'll use lower leverage because that way it gives it time to move up and down. I can add to my entries on the pullbacks. Same thing for here. If you're having a larger time frame for this smaller market cap coin, you could do a 2x and then just let it ride for maybe a month or two. Now, granted, you have to also include the fees that are incurring with your trade. The higher the leverage, the more fees, because the higher the leverage, the more money you're borrowing. So that's also very important as well. But when it comes to market caps, well, when it comes to leverage, you have to take into account the market cap. Not only that, but is there activity? Is there movement? Are the people buying and selling? If there's not, maybe you might need to do a 10x on this low market cap coin, but only use very little money though, because that it could dump and liquidate you or get you stopped out. Or maybe, just put a 2x or a 3x. There are some coins where they're very low market cap coin and you'll do like a 5x on it. And it's literally like trading a 50x leverage on a higher market coin just because it moves so much. Give you a heads up. I'm pretty much finished with this. We talked about time frame. We talked about the amount of money, to put in. When you're using higher leverage, you can use less money. So that's good. For the lower leverage, you want to use more money. But the main thing out of all this is your stop loss. Again, risk management. If you're risking 1% of your portfolio and you have a $100 account, that means you're only risking $1 per trade. That doesn't mean you're only trading with $1. That means you're only risking $1. So regardless of your leverage, regardless of your margin, the amount of money you're actually trading with, regardless of everything, the only thing that is super important is the amount of money you're willing to lose on this trade. For this example, 1% of our total portfolio is $1. So let's say I entered here and my stop loss is down here. But I'm going to do 2 entries. So this first stop loss is 50 cents. Granted, this is not sexy, guys. This means I'm only trading with, depending on how much leverage I have, $2, $5. Not sexy. Not sexy one bit. Now I'm going to go over something in just a moment. And let's say the price is this number and it breaks this level, and we're waiting for it to come back down. And it comes down, it breaks this level, we add here. So we have our new stop loss, let's say here. Now here, I'm doing a stop loss 50 cents. So my total that I can lose is $1. 50 cents here, 50 cents here, or maybe I can even move this one up. So now this is reduced to, let's say, 30 cents. So now I can actually increase this one to 70 cents for my stop loss. And again, this is just showing that different ways of entering trades. Now, the most important part is the amount you're willing to lose. Very, very important. Now, when the market gets better and it's easier to trade and we have more of a direction instead of chop, then instead of doing 1% of your portfolio, now we could possibly do 2%. Or even 3%, or even maybe 4%, or 5%, depending on the market conditions. However, in my opinion, I personally do not recommend trading 5% at this current market, because this current market, well, you can see it, like it plays out for a few hours, maybe a day or two, and then it flips. So be very careful.